So trading is all about just buying and selling. It's as simple as that, okay? So just the way you go to the market and buy one or two things, that's the way trading is. You go and buy at a good price and you can decide to sell it later at a better price. Okay, for example, now let's say you bought um, a wristwatch at home when before going to school. Let's say you bought a wristwatch for 1,000 naira. Then when you got to school, you sold it to your friend for 1,200 naira. That means you just made a profit of around 200 naira on that particular wristwatch. Okay, so that's just what trading is all about. Now that we know that trading is just all about buying and selling. Now, how do we know when to buy and how do we know when to sell? Okay, so that's what technical analysis and fundamental analysis is there to do for us. Before I continue, let me know if you can hear me in the chat box before I continue, so I won't be speaking to myself. Okay. I'm here to see any message in the chat box. Can you all hear me so I can continue? Okay, great. So technical analysis, for me personally, I only use technical analysis for my trading. I don't use fundamental analysis at all. Okay, so for technical analysis, let me give you an example of what technical analysis is. For those who play Bet Nigeria or all these betting sites and go to place bets on different sports games. Now, for you to place a bet on a particular team, you don't just go there and pick a random team and just start placing your money on them. No, you would you will have done a proper research at home. For example, now let's say you want to bet, let's say now Real Madrid and Barca wants to play. Okay, so you want to bet on a particular team. Now, how do you know which team to bet on? Let's say you are a newbie to what is betting stuff. Okay, so what you do is you go to their previous games, check which team are the best players and the rest like that. So you are predicting, you want to predict their future results from their past performance. So that's what technical analysis is all about. You are predicting their future performance from their past performance. Okay, so that's what technical analysis is. You predict, let's say for example, now you want to predict Bitcoin's next movement. You can do that by looking at what price has done before. Let me show you my chart. Okay, so on this chart now you can see candlesticks here. So for you to predict the next move of this particular coin here, this is reserve rights token. So for you to predict the next move, all you have to do is check what price has done before. Then with that information, you can use it to determine where price should go to next. For those that are not seeing the name of the coin, this is the name of the coin here. Reserve rights token. Okay, so back to where I was before. Now for fundamental analysis, you you buy based on news. For example, now when coronavirus came out, some people who were very like industrial or who know how to do business, the first thing that came to their mind was, now that coronavirus is out, how can we prevent it? Now they know that the use of nose masks and the rest can help them prevent the virus from spreading. So they decided to buy that particular product in bulk. They bought it in bulk, and when it started getting out of band in Nigeria, they started selling it out. So let's say, for example, they bought a pack for 2,000 naira. Then when the virus broke out, they started selling that same pack for like 5,000 naira, 10,000 naira. And it's even true. During those times, you see that the price of nose masks increased and the price of hand sanitizer. So you react based on news. For example, now, this particular coin that I'm looking at now, let's say that let's say Dangote bought this particular coin, that he wants to be the sole owner of this particular coin. People knowing that Dangote bought it might want to quickly buy that. Oh, Dangote is buying this coin, so let's buy it and pack it in bulk, so they can buy this coin. And from that buying, from the how I say, from the joint buying, when a lot of people buy it, the coin starts pumping. So that's how traders make money, from buying and selling based on fundamental analysis. Fundamental analysis just deals with news, while technical analysis deals with using past price movement to predict the next price movement. So if you understood what I said in for the past let's say 5 minutes, let me indicate in the chat box, let me know. Okay. Okay, I'm here to see any reply in the chat box. Okay. Okay, good. Now let's move to types of traders. Now we have different types of traders. We have scalpers, we have swing traders, we have position traders. Now, scalpers are those that buy and sell at a very in a very short time. For example, now let me give you an example. Let's say, okay, now let's say you saw that coronavirus. Let's say now you got the information that coronavirus would break out in Nigeria tomorrow. Okay, now you knowing that, or let's say that you heard that it will break out in Nigeria in the next 10 minutes. Then you, as a very industrious person, you decide to go and run and buy nose masks and pack it in bulk. So when it breaks out, people will start looking for nose masks up and down. And because you bought a lot of it already, you start selling to them at a higher price. Okay, so that's like what scalping is. They buy and sell in a very short time. A scalper can just enter a trade now, in the next 5 minutes is out already, or in the next 15 minutes is out already. So they take lots of trades and they get in and out of positions in a very short time. Okay, so for swing traders, their trades can take up to a day, 2 days, or a few hours. For example, now let me show you this coin. Let's say I bought this particular coin here from this place here. Let's say I bought this coin from this place here. I hope you can see my chart. Okay, so let's say I bought this particular coin from this place here now, and it's moved from here to this level here. Now let's check how many hours or how many minutes it used to reach this point here. So let's say I bought here, this is 13, this is 1 o'clock, and now this is around 5 o'clock, or let's just say this is around, we are currently at 9:12 now. So this is just in a few hours. So a swing trader can buy this particular coin from here now and sell around this level here, and that's a very good percentage to make good profit on this particular coin. Let's see how many percentage that is there. Okay, so this is around 23%. So let's say the swing trader bought around this level here, then it sold around here, so that's around 23% profit. So we did for a swing trader, their trades might take days or hours before it plays out. Okay, so for position traders, their trades can last for months, weeks. So they are not really bothered about the small price movement. They are not bothered about the okay, let's say let me use the same corona as an example. Let's say someone knows that corona might break out in Nigeria, let's say in 5 or 6 months. Now he's starting to buy these packs of face masks and hand sanitizer now, but in between the price of these face masks and hand sanitizer that you bought, let's say you bought around 15 naira per one, it might decrease to 20 naira because there's no use for it now. But he knows that in the next 5 or 6 months, then the hand sanitizers and face masks would cost more because there will be an outbreak by then. So at that particular time, he's not bothered about this small price fluctuation that is, it might go from 15 naira to 20 naira, from 20 naira to 30 naira. He's not bothered. He knows that in a few months it would sell for a good profit. So that's just what trading is all about. They take trades for an extended period of time. It can take weeks, can take months, or sometimes years. Okay, so that's for that. I have a very limited time. That's why I'm trying to rush this thing. So now let's move to spot futures and how to calculate profit and loss in crypto. Okay, so for spot trading, now let me give you an example. Let's say you have a capital of 1 million naira. Okay, so you have a capital of 1 million naira, and you want to buy this particular coin that we are looking at here. Now, like I said the other time, let me bring out this measuring tool. From here to this point here is 23, or let's just say 20%. Is 20%. Let's say out of that my 1 million naira capital, I decided to just put 100,000 naira to buy this particular coin. Remember, my capital is 1 million. Okay, then I decided to bring out 100,000 naira of my capital to buy this particular coin. Now, when this coin moves from this point here up to this point here, now I know we've made 20%. That's 20% of 100,000 naira is how much? That's 20,000. That means I just made 20,000 on that particular trade. So that's how spot works. You buy and sell. So the percentage you make is how you calculate your profit and loss when it comes to spot trading. Okay, so and for futures trading, you can make use of leverage. Let's say, for example, now I want to buy this particular coin too, but I'll be using leverage this time. Leverage allows me to buy more than I have. Let's say I have 1 million now, and I decide to use 2 times leverage. That means my money will be multiplied by 2, so I can buy more than I have in my account balance. Okay, so let's say I decided to use the same 100,000 naira on this trade, and I put 2 times leverage. 2 times 100,000 is how much? 200,000. So 200,000. When I make 20% here again, instead of me making just 20,000 naira, I'll be making 40,000 naira out of this particular trade here. Okay, so that's just like what the difference between sport and futures is. In sport, you can't use leverage; you just calculate it based on the percentage you make. And in futures, you can use leverage to trade. Okay, if you got that, please let me know in the chat box. If you understood what I said there, you can indicate in the chat box. Okay, so let me move to the next topic here. Okay, so I'm trying to be as fast as possible. Now, under technical analysis, we have candlestick pattern. So these are different ways that you can use to predict future price movements. Okay, I'll go over leverage again. I'm coming. Okay, so for technical analysis, these are different ways that you can use to predict future price movements under technical analysis. We have candlestick patterns, we have chart patterns, we have support and resistance, we have trend lines, we have relative strength index. So like I said, I only use technical analysis, and technical analysis in itself is enough for you to be able to trade profitably as a trader. Okay, so for example, now under candlestick patterns, we have the hammer, we have the engulfing candle, we have the hanging man, shooting star, and evening star. So these are all different names of different patterns. So when you see these particular patterns, you know that this should either be a buy or sell signal. For example, now when I see an hammer, at the end of a downtrend. Let's say after price came all the way down, when price came all the way down to this point here, okay, then an hammer formed around this level. We saw a hammer around this level here. Then we know that price should go up anytime soon from this particular level here. Okay, so this here is an example of an hammer. Okay, so here is one example here. You can see what happened after the hammer formed there. So the hammer led to a price or to an increase in price. So after the hammer formed, assuming you bought from this level here, then you'll have made a significant profit from this side here. So we have different types of patterns there. So you can go, I have some materials for you to go through here. If you check my channel, you'll see this particular PDF there. So it explains candlestick patterns more. So I won't really be going into that now. Okay. Okay, so now for chart patterns, we have ascending triangles, we have descending triangles, we have falling wedge, we have rising wedge, we have double bottoms and tops. Okay, so these patterns also, like the chart, like the candlestick patterns, indicate whether you should buy or you should sell. For example, now a falling wedge pattern is mostly regarded as a bullish pattern. That is mostly regarded as a pattern that should make price go to the upside. Okay, so this particular chart pattern here, when you see it, you know that price should start going up. And also the rising wedge is a bearish pattern. That is, when you see this pattern here, you know that price should start coming down from there. Okay, and also we have double bottoms and tops. They all indicate bullish and bearish trends. Okay, so I'll not really be going into that today. Okay, so for support and resistance. Okay, now let me give you an example of what support and resistance is. Let's say you are inside your house now and it is a fenced house, and the only way out of that house is the gate. Now, let's say someone just comes in the middle of the night, removes the gate, and decides to cement your gate. Okay, decides to remove the gate and cement the passage where you passed out of the house. Okay, now the gate is no longer there and the house is completely fenced, and now you are all alone inside your house. What you are looking for now is a way to get out of the house. Now it's either you decide to break the wall and go out of the compound, or you decide to stay inside the house and wait for help from outside, or just decide to stay there forever. But I know what most people will choose is to break the wall and get out of the compound. Okay, so now when you on your first try to break the wall, it is sure that the wall won't break immediately. Okay, then maybe you try the second time, or maybe on the third try, then you can break the wall and get out of the compound. Okay, so that's just what support and resistance is. Support is what is preventing you from going back, while resistance is what is preventing you from going to the front. Okay, so resistance is always above price, while support is always below price. Okay, so like the example that I did there now. Come in, let me clear my chart. Clear my chart. Okay. Now you can see here now. Let's say we have price. Let's say this is an human being walking up and down here now, and he discovers that there's a wall here that he cannot break. You can see that on the let me try to show it very well. On the first try to break this wall here, the particular person couldn't get out, so he had to try again. He had to move back again. He had to move to the back again and try again to break the wall again, but it couldn't break through. But at least it was showing sign that it can break at any time. And also, one thing you should notice that as it was trying to break through the wall here, it was also creating a support at his back. Okay, keep coming. So as it was trying to break the wall in front of him, he was also creating a wall at his back. So when he saw that he couldn't break past the wall in front, he decided to go back with full force. And you can see that when he reached this point here, he broke out of this particular wall here and started going up. So that is just like what support and resistance is. You have different walls in front of it. Is either so resistance is always on top of price, while support is always below price. So that's what support and resistance really means. Okay, so let me move to the next one. So we have trend lines. Trend lines is also just like it is support and resistance, but this time it is vertical. Okay, let me show you what I'm trying to say. So this is what a trend line is. Okay. So for the example that I did on support and resistance, if you check my Telegram channel, you see that particular type of example there. So I went into more details on that too. Okay, so here now we have this here. You can see that this is just another type of support and resistance. You can see that at the first try to break above this one here, price couldn't go above it. It came all the way down here again. Tried to go above it again, but couldn't break above it. Came down again, and this time when it tried to break it, it actually broke through, and it is outside the wall now. But the difference between this one here and this one that I explained, that this one is horizontal, while this one is vertical. Okay, so that is just the difference between support and resistance and trend lines. Okay, so like I said for this one, Neda, when this person was trying to break through this wall here, it was forming a wall at his back too, without him knowing. So this one too here, I think we have a wall here too. So we have a wall here too. Okay, so we have this wall here too. So this is also serving as a wall to it. So assuming the person started coming back again and broke through this one here, then we see that this one has been broken, but it decided to break above this one. Maybe because this one is already weak already, so it decided to put more pressure on this one, and it actually broke out of this one here. Okay, so I think I did justice to that. If you understood that, please let me know in the chat box so I'll know where to continue from. Okay, I'm expecting your message. Did you understand the concept of support and resistance and trend lines? Okay. Okay. Now to the next one, we have the RSI, which is the Relative Strength Index. Okay, let me show you what the RSI is. Okay, so this is what the RSI is. So this is an example of the RSI. Okay, so there are a lot of indicators. The RSI is an indicator, but it is more popular and well used among traders. Okay, so we have this here, which is the RSI. It is called the Relative Strength Index in full. Okay, so now for the RSI, this is how it is used. Above here now we have, for the RSI we have the 70 line and the 30 line. Now the 70 line, here is the 70 line here, and here is the 30 line. Now once price is above this 70 line here, then this is regarded as overbought. They'll tell you that the RSI is overbought already, and once it is below this 30 line here, then they'll tell you that it is oversold. Now what does this mean? Now let's say this is a chart of sugar, and let's say they sell that small Dangote sachet for around 100 naira. Now assume that this, oh no, okay, let me use a perfect example. Now I think onion is very expensive now from what I've been seeing so far on people's status. So now let's say onion now gets to that small onion, that small bulb gets to 1,000 naira per one, then you know that it is overvalued, that this particular onion shouldn't be sold for that price. So you know that very soon that particular onion should be selling lower than that price because it is too much. The onion should be sold for, let's say, like 15 naira or 20 naira. Now let's say it is now sold for 1,000 naira. Okay, so you know that there's a reason behind it, and once the reason is no longer there, it would fall back to its normal price. Okay, so that's just like what this is. It means that this is overvalued. As I said, is overbought. Now you can see that, for example, now when this particular coin entered this overbought area, it ended up falling back into the into this zone here, in between the 70 and 30 line. Okay, so now, and also for the oversold area, it means when something is undervalued. Let's say, for example, now someone comes to you and say that the new iPhone 12 that is selling it for, that they are selling it for 100,000 naira. What will you do? You rush and buy it because you know that it is too cheap to be sold at that price. So now you're trying to be industrial, you're trying to buy quickly at that price and maybe later sell for a higher price when it gets to the normal price, because it shouldn't be sold at that amount. There should be a reason why it is sold at that amount. Okay, so when a particular coin is said to be oversold, then that means it is undervalued. It is priced below its normal value. Okay, that's why I used the example of the iPhone 12. So once the iPhone 12 starts selling for 100,000 naira, all of a sudden, after it is just released, then you know that there's a problem somewhere. And once the problem is solved, the particular iPhone will go back to its normal price. So if you bought early, then you'll be able to benefit from the whatever problem that happened. Okay, so that's just how to use the RSI. You use the overbought and oversold feature of the RSI. And also we have divergence too from the RSI, but I would not be going into that today because I've even been notified that I have less than 9 minutes to go. So let me use this time to take any questions, and we'll end the class here. Okay, so if you have questions, you can ask now, so we can close this for now. Okay, look, let me know if you have questions. And also, if you have been saying bullish and bearish here, bullish means when price is going up, and bearish means when price is coming down. It can also be called the uptrend. Bullish can also mean an uptrend, that is something is going up, and bearish can also mean a downtrend, that is something is going down. So, okay, leverage. Leverage allows you to buy with more than your capital. It gives you more buying power. Let's say, for example, now, okay, let me use something that you are more familiar with. For those that play Bet Naija too, let's say, for example, now Bet Naija suddenly brings out a feature for you to be able to bet with more than your money. That is, let's say maybe you bring 1,000 naira now to bet on a particular team. Then they give you leverage. That is, you can times your money times two and make a bigger amount of money instead of just using your normal capital. So that's just what leverage is like. So let's say normally once you bet on a team and the team wins, you can make like without your 1,000 naira, you can make 3,000 naira. And maybe when you want to lose, you can lose just 200 naira. But when you're using leverage, you'll be able to make more than you could make normally with your normal capital. And also when you lose to you lose more because your normal loss is now multiplied by times the leverage that you use. You have up to 100 times leverage. You have up to 125 times leverage. You have up to 10 times leverage, 30 times leverage, and also like you have as many leverage as possible. Depends on what you want to use. So the higher your leverage, the more the profit, and also the higher your leverage, the more um the bigger your loss. So I would advise you to stay away from using leverage for now till you understand the concept of what trading is all about. Okay, Aban, did I answer your question? Okay, he said, does that mean you have to bear the loss? You have to pay the extra money given to you by the company? Once you lose, let's say now, okay, let me give you a good example. Let's say you put $1,000 on a trade and use two times leverage. That means you have $2,000 to trade. Now, let's say you now enter the trade and normally without leverage, you're supposed to lose $20 out of your $1,000. Okay. Now, when you use leverage, two times leverage times 1,000 is $2,000. Now, $2,000, okay, two times your normal loss, which is $20, is $40. Okay, so instead of you losing $20, you'll be losing $40 because you are now using a higher leverage. You are using leverage with your money, so you don't have to pay the extra money given to you by the company. No, they're just giving you access to leverage to be able to trade bigger. Okay, so once you lose, you won't lose more than you won't lose more than your capital. It's only your capital that you will lose. And once you lose your capital and you no longer have nothing to trade, you either have to deposit more or you go home. So that's just what leverage is. You don't lose the money that the company gives you. No, you will lose it virtually, but you're not going to pay it back. They've already removed it from your own, so there's nothing complicated about that. Okay, so any other question? Aban, did I answer your question? The time is almost up, so if you have any other questions, you can ask before the end of the class. Okay, good. Okay, so any other question? Another question? If you have another question, you can ask now before I end the class. Okay, so the recorded version would also be available for those. Okay, sir, some are new to crypto. Don't know if you can explain some important feature on your chart. Okay, so I would not be able to do that now because I have limited time, and once this time expires now, I'll be kicked out of Zoom. So you can check my Telegram channel. I think there are valuable materials there that you can use to study and understand more about what crypto is all about. Okay, you said my Telegram channel link. I'll drop it in the group so you can check for whatever you want from there. Okay. So I hope you all enjoy the class and I will drop it in the group. Okay, so you would all see it from the group, from the exact place that you saw the link to this class. Okay, so that will be that for the class. I'll be ending the class now, so I hope you all have good night rest. Okay.